Alright guys, so in my last video I just explained using a mechanical approach, and I didn't want the video to be very long, so I had to segment the videos into two sections. So the last video is a mechanical approach of how to see the strategy. So now let's dive real deep into the market, and I will show you with some examples how that strategy really plays out in the market. So, but you also have to do your own work. After this video, you can go and backtest. After backtesting, you take samples of the trades, 50 to 100 trades, and do your own research for yourself. Alright, so let's head over into the market. So in today's today we are going to be using Euro USD to get. So alright, so you can see the examples. Let's start from this is Friday. This is Monday. This is Monday 19th January 2026. Monday 19th 2026. So sorry guys, yeah. So what did I say is the first indication of interest of the strategy? First, you need to see a change of character or a break of structure in your higher time frame. So price broke this high. As it broke this high, it retraced. It didn't retrace to the 50%. Why didn't it retrace to the 50%? Because this is the support. This is a support in price, because price has been making lower lows and lower highs. Price has been making lower lows and lower highs. Price then broke through the previous lower high. This is the first instance that bullishness is entering the market. As I say, bullishness is when price is making higher highs and higher lows. When there was a predominant selling market, where the market is making lower lows and lower highs, the sellers are in the market. When price successfully breaks the previous lower high, now this is called a change of character. Now the character has changed from bearish to bullish. So in case you guys are hearing any noises in the background, just bear in mind with me. I'm in a place where there is a little bit of noise, but not that much noise. So price broke the previous lower high. That's the first indication. So second, I highlighted that the bodies of the previous lower high, it's always a strong level of support or resistance. So at this moment, it's price broke above the previous lower high, So now it now becomes a valid support area. So, and this zone is usually strong. It's usually strong. So now it's usually strong. So now I know that this zone is strong. So I now come to the charts. Price already has headed. Price already has headed high, breaking this, breaking this. I apply my apply my fibs, apply my Fibonacci from this to this, from this to this. All right. So, and you only take this trade. This is Euro USD. You don't trade every time. You need to take a session where you need to be placing your trades, and Euro USD, Euro and USD. Euro moves in the London session and also in the New York session. Never you trade Euro USD in the Asian session because the European market is not open, the US market is not open in it's Euro and USD. So Europe is not open in the Asian session, and USD, that is the dollar, United States, is not open during the session. So there will be practically no movement in the market. So price broke above. It broke above this in the Asian session. It had the strength to break above in the Asian. In Mondays, in Sundays, open. Sunday opens by 10 p.m. It opened by 10 p.m. just on 10 p.m. UTC. 10 p.m. It opened by 10 p.m. at 22. So now price broke above the previous lower high. The first retracement is during the Asian session, but this is not my business because I don't trade during the Asian session. So I wait till 2 hours. I personally wait 2 hours. I like trading 2 hours, like in the London session. Me in Nigeria in the London session. London session, I start trading by. I start checking the market. Sorry, guys. I start checking the market. I wake up by around 6 o'clock. This is when I start checking the market. So, seeing this, I saw this 7 o'clock. This is not my business, and this is not my business because I just want price to come and tap into this area. 8 o'clock, it tapped. Yes, it tapped. Now this is when I'm interested in the market. So 9 o'clock, it also tapped. So this candles closed from 9 to 10 p.m. This candle is from 9 o'clock. It started by 9 and ended by 10. And this is how it closed, with a very, very, very weak candlestick. So I head over to my 5 minutes time frame. Heading over to my 5 minutes time frame. Alright, so now we are in the 5 minutes time frame, and this is the level. This is the level marked in the hedge 1 time frame, the support level. So price hit this level, and you see that price is making lower lows, lower highs, lower lows, lower highs. I'll be expecting for price to close above here. This is the last lower high. So this is the place I'll be waiting for price to break above. Then this is going to be my indication that buyers are taking over this market. So when I see this indication, you can simply just place a trade. You can also simply just place a trade here. You can simply place a trade here with a stop loss. Your stop loss below here for aggressive traders. Also too, you can wait. Like I told you, the concept of that support and resistance, when price breaks above, like price has been going lower lows and lower highs, a direction, and the price now, the first indication, the change of character as price closed above this, showing that now buyers are now taking over into this market. Now I bring over my line to the place where the borders close. I can place my trade. I can place it here. I can also place it here. Also subjective to you. So, but me, I like placing mine at the body close of the high. So now you can see that price hits this zone and rejected it. So this will be my entry. My entry is going to be here. With my stop loss now, because my stop loss now is going to be at this low, because price already has broken. It can also be at this low. I can place my stop loss here. I can also place my stop loss there. So for now, I'm just going to keep my stop loss here because this is a low, and my take profit is going to be here. It's going to be there. So let me look at it. Yes, it was at that high. It was at that high. Yeah, going to be at that high. So price, you can see price gave 2.5% from the market. So let's head over and let's quick. I don't want this video to be so long. Let's head over to the H1 time frame to see more examples. To see more of the examples. Alright, we are back into the H1 time frame. So you can see that you see where we had a break of structure, stop loss was and take profit was here. It was here, giving 2.5%. Still on the same day, you can see from the mechanical video, the mechanical approach I gave, you must have first a break of structure. Like I said, this is a change of character. Why this is a change of character? Because price was bullish. The price was going the opposite direction before, making lower lows and lower highs. That means sellers were in the market. Now bulls now took over, and that is why I said this is a change of character, because it changed the character from bearish to bullish, and it broke a previous lower high. So now this one, now it broke above this high, the previous high. This is a break of structure, a break of bullish structure. So price retraced, then price now came from this candlestick and rallied up and broke this previous high. This is a break of structure. Now an indication of the strategy is, first you need to see a break of structure. You see a break of structure. Now you see the break of structure. When you see a break of structure, you wait for the retracement. So now we see a break of structure. You can apply your fibs. Now you apply your fibs from this low to this high to identify the 50%. To identify the 50%. But price did not reach the 50%. It was just shy. It was just shy of the 50%. So price was just shy of the 50% level. But you can see, I can see this level here. From the top to the bottom, I can see this level here. This is a demand zone. Why this price? This was the last place where sellers reacted to the market before there was a bullish rally breaking this previous high. So this is a continuation pattern demand zone. This is a demand zone that broke the previous high. So price came shy of the 50%, tapped into the demand zone and formed this bullish pin bar. Please, I give you guys the urge to go and look for bullish candlestick and bearish candlesticks. Bullish rejection candlesticks and bearish rejection candlesticks. So this is a bullish rejection candlestick. This is a pin bar. So, but there are two main bullish rejection candlesticks. You have the pin bar, and you also have the bullish engulfing candlestick, and also they have the morning and evening star. So, but the morning and evening star is comprising of 3 candlesticks. So, just make your research and you understand what I'm talking about. And also, if you want me to make a video about the candlesticks, you can leave a comment below in the comment section. So, seeing this, I'm heading over to my 5 minutes time frame to dissect more on what is happening in the markets. Alright, we are now in the 5 minutes time frame. This was the previous trades. Remember, this is the same day. This was during the London session. It was during the London stroke. This break happened by 12:15, yeah. So by 1 o'clock, this was when the beginning of the New York session. So we had 2 trades today. 2 trades. The market retraced after breaking structure. You see, this red line was the previous high. So price broke structure, came back. You can see broke. Yeah, you broke, like it formed a really bearish structure. So now this was the last. There was the last high, and also this was also another high, because this was, you can see it's a high because there was a candle by the left that closed above this candle, and also to the right that closed above this. So now I can see price was very bullish as it hit this place. It closed above this. It showed the change of character, closing above the previous lower high. If you are aggressive in the market, you will just simply have entered the market at this break. But also, if you want to wait, sometimes I don't even wait. I just take this trade like this. I take this trade here, because price might end up just not even sometimes retracing back and just keeps going up. So, but if you waited, fine, you would have taken a trade here. But let me just assume that I took this trade over here. My stop loss is going to be below this zone. So where is my take profit? My take profit, this was previous high, giving me 1%. Nah, I won't accept 1%. So I will move over to the H1 time frame to identify possible areas I can take my profits. I can see that this was also an area where I can take my profits. A previous high. This gave me 2.6%. This was also
an area, but you can see if you are if you're a risky kind of person, this is by 1 o'clock. This is by 1 o'clock. Then there's time for this for movement to happen. And I know that there was news in this day for price to push like this. But assuming you left your trade open, this was going to be like an 11%. And this is, I know that, okay, looking at this structure, I know that this is a daily. The daily was moving. You can decide to take a profit above that high. So you can see that it gave like a 7% in a day, plus the previous one you took, oh, plus this 2%. Okay, just imagine that you just left your trade and it went to 11%. Damn, is it not good? You can also see this other one, price retraced. This is the 50%, but I'm not going to go over this one because I've already showed enough examples and I don't want this video to be too long. So I hope you got something valuable from what I have explained in the market. First, you need a break of structure or a change of character. Price needs to break above a high. That is if you are being bullish. But if you are bearish, you need to break below the low. Then after the break, you need to see a retracement to an area of value, Then when price retraces to an area of value, then you wait for a rejection in that higher time frame. Then when you see a rejection candlestick in an area of value, you scale down to your smaller time frame to dissect what really happened. Now, when you dissect what really happened, you now place a trade and put your stop loss below and your targets above, your targets at the high or above the high at previous highs. So that is as simple as that. So go and do your work and do your back test and make yourself more confident in this strategy. So thank you guys. Don't forget to like and subscribe, and don't forget to comment on what you want me to upload more, on the videos you want me to upload more. Remember that this channel is an educational channel, so I'm here to educate you people. So thank you and thank you. Thank you and bless. May your day be blessed. So goodbye.